Right, so next up we have David Cole from EMX Royalties. They just completed a 10 million investment by the biggest royalty player, Franco-Nevada. And we've seen some increase in M&A at the royalty player, so maybe you're next? I don't know.
Yeah, Christian, thank you very much. Yeah. Yeah, so the forward button is right here. Let's go straight to the business model. So the thing that makes EMX unique and our hedgehog is our royalty generation activities, and it's specifically our royalty generation activities is what attracted Franco-Nevada, Christian, to become a shareholder. And we're the only, Paul Brink allowed me to say this, he told me this specifically, told me I'm allowed to tell people this, that we're the only junior royalty investment they've ever made, and they hold our stock. They're happy to be shareholders, and they specifically were motivated to become a shareholder in EMX because of our royalty generation activities, which is our hedgehog, is the thing that sets us apart from our competition. And for those of you that are not familiar with this business model, it's the prospect generation business model focused on the royalty component. So we go around the world, we acquire prospective mineral rights, we become the underlying owner of those mineral rights. We coalesce existing data, we add other data that we collect in the field, then build geologic models to illustrate the prospectiveness of these assets, sell them on to an industry that's hungry for discovery opportunity in exchange for cash, shares, work commitments, annual payments, and always a royalty at the end of the day. And so we're in a situation where we're being paid in cash and share payments to build a royalty portfolio rather than paying dearly to acquire royalties to build our portfolio. It's a fantastic model, but to augment the model that we do through royalty generation, which our critics will correctly point out that this is the get-rich-slow plan. It takes a long time to go from an early stage prospecting to actually having producing royalties. We combat that with the annual payments and share payments. The added optionality of the share payments has worked out exceedingly well for us in the 19 years that we've executed this business model. But to further the whole portfolio and pour gasoline on the fire, we also buy royalties. And as Christian pointed out, we bought a couple of key royalty portfolio and individual royalty acquisitions within the last year, investing about $100 million across those acquisitions that have really catapulted us to the point where we're at the tipping point now, where we're moving from a junior company that's been building a royalty portfolio through the prospect generation business model to a mid-tier company with strong cash flows, and that'll happen this year. One of the key components that has gotten us to this point in time has been the wins that have come out of our strategic investing. And I'll say right up front that not all of our strategic investments work. We just wrote off the Rawhide investment, a little bit of egg on our face on that one. But overall, the net gain that we've had from our strategic investments is over $50 million USD. That's net gain. That's after tax, I might point out. And we've reinvested those monies right back into royalty generation and royalty acquisition to drive our portfolio forward. And this is what the world map looks like. So we have over 300 mineral property positions worldwide, over 150 individual royalties. 5 of those will soon be cash flowing. This accumulates to 5 million acres of mineral right exposure that we've built over the last 2 decades. That is, if you prefer square kilometers, 20,000 square kilometers globally. Key within this is the Gediktepe mine, which will become our largest cash flowing royalty looking forward. That is a gold and silver upper oxide zone in addition to a sulfide zone. We have a 10% royalty on the oxide, 2% on the sulfide. The sulfide will be in production in 23. The oxide is already in production. The royalty, which is 10%, kicks in after 10,000 ounces have been poured down. I was just told that they're at ounce 8,900. So this literally will become a cash flowing royalty of substantial nature, probably around $12 million per annum, starting within a couple of weeks. They're right smack dab on budget. We're very happy to see that. So moving to South America, the Diablillos operation, we get pre-production payments here, about $2.25 million per year. That is an advancing asset with some great drill results just recently announced. We're happy to see that. Berenguela is another asset with some really nice drill results coming out that we're very pleased with, also pre-production. But the production asset, the copper moly production asset at Caserones in Chile is cash flowing to us now at about $6.5 million after tax US per year. It's a nice asset to have on the books. We're substantial mineral holders in the United States, where we touch over 12,000 mining claims, including the Leeville operation now operated by Barrick, part of Nevada Gold Mines, and that is cash flowing currently around $2.5 million per annum. Happy to have that gold exposure. Now moving over to Europe, and the very important one. Long-term, this will be our largest cash flowing royalty and our most valuable royalty in the portfolio, and that is the Timok royalty. And we did have a dispute, or we do have a dispute with Xinjiang, the operator, over a strangely worded royalty document. I did not write this royalty. I bought it for $200,000 many years ago before it was recognized. This is one of the largest discoveries on the continent of Europe. It's now one of the largest, I believe it is the largest single copper gold mine in Europe. We're delighted to be the only company with a royalty on this asset. So we announced that we would go to arbitration with Xinjiang. We then got some friendly letters from them saying, let's meet and discuss how we can handle this amicably. And I'm happy to say that those conversations have been professional. They've been quite communicative. I'm quite confident that we will have a reasonable conclusion to this that will be announced within a month or so. And I believe that there's some overhang on our stock caused by this. It's creating a buying opportunity. Long term, this is going to become a key asset. So that touches upon some of the major assets in the portfolio. I will point out that we're the largest single mineral rights holder in all of Fennoscandia, with substantial exposure to those geologic terrains thanks to our business model. So obviously, immense geographic diversity with assets across a dozen countries or more. Most of our near-term income is from gold, but the future of the company definitely is in the big copper systems that we have exposure to. We're delighted to have this diversity. We've always been of the opinion that diversity is a good thing. And there's, we love nickel, we love copper, we love gold, we love silver. From an asset class perspective, what I mean by that is those projects which we have sold or have purchased a royalty on, have sold and kept a royalty, or we have purchased a royalty on, and those which are available assets means we own them 100%. They're part of our royalty generation portfolio, where we're coalescing data and preparing to sell those on to an industry. I'll point out that with respect to our deal flow, we've sold 83 projects in the last 4 years. We're substantially the most prolific project generator, royalty generator on the planet. We've proven this business model again and again over the last 19 years. I get a lot of generalists ask me questions about this, saying, how is it possible that you're able to do that? And well, we've been fine-tuning our skill sets in that regard, and we continue to show up the naysayers and do it year after year. I anticipate that we'll sell 20, 25 projects this calendar year. And these are the folks that buy them. And these are our counterparties. And these are the folks that spend that immense amount of money across our portfolio. We added up that in 2021, over $200 million was spent by these folks on our properties in mine development work, in drilling, exploration work, et cetera. And we expect that number to be close to $300 million in 22. That creates this concept of optionality within a royalty portfolio, where we're exposed to the upside in the commodity price, but we're not exposed to all the different costs across the spectrum of exploration, development, mine building, et cetera. So royalties are key financial instruments to have in times of inflation. In fact, inflation is our friend. So this is our shareholder registry. I'm very proud of this. We've done really well throughout the history of the company, having strategic shareholders such as Newmont Mining Corporation. In the past, Barrick's been a shareholder. And very pleased to bring in SSR, where they took half equity in EMX and half cash when we bought their portfolio to substantially grow our asset base. Pleased to have them on as a shareholder. And then it's a real feather in our cap. I have a huge amount of respect for Seymour Schulitz, Pierre Lassonde, Paul Brink, the guys at Franco-Nevada built the best royalty company in the world, really forged the path of the royalty business. And for them to come along and say they'd like to buy a piece of us was a delightful day. And we're pleased to have them. They have 6.1% on a fully diluted basis. They did buy those units at 25% premium to market. We're sitting here after being in business for 19 years with 109 million shares issued and outstanding, 127 million fully diluted. And let's talk about some of these recent deals. I'd like to point out that our next strategic investment that we're excited about is our investment in premium nickel. We love nickel. It's hard to find good nickel assets to invest in. Premium Nickel is a private company. We own 6%. They're going public via RTO into North American Nickel, ticker symbol NAN on the Vancouver Exchange. We believe, well, put it this way, I'll be disappointed if we only double our money.
Me too.
Yeah. I think this one's going to do really well. It'll be in the top 5 nickel sulfide systems on the planet, past producer in Botswana. As I've already mentioned, the 10 million USD financing from Franco-Nevada, happy to have them on board. Additional acquisition of Caserones royalty, putting us up at that $6.5 million per year cash flow from that. And then more and more deal flow coming out of our organic side of our business through the prospect generation. This here just corrected me and says it's 83 projects sold in the last 4 years. I believe there's been one announced since then, so maybe it's 84. Certainly there's a couple more coming tomorrow. So Caserones officially is a 17-year mine life. Our geologic interpretation is it's probably more likely 30. There's a lot of opportunity for the resources here to grow. And if you think about a bond that's denominated in pounds of copper, paying for 30 years, what's that worth? You know, we're just delighted to have this asset as a key cash flowing asset within the portfolio. So an update on the SSR portfolio, most importantly, is that oxide zone at Gediktepe. This was a front-weighted cash flow model that's unusual in the royalty space in that that a lot of our payback comes right away from the oxide zone at Gediktepe. And as I said, they're at ounce 8,900, and the royalty kicks in at 10,000 ounces. So we're literally just a couple of weeks away from getting our first check there. The sulfide zone we expect to see in production in 23. Yeni Pazar is a delayed payment. We do not have to pay for that MPI until it's advanced towards production, which is a good thing because it's been delayed, and that's why we negotiated it in that way. And so we'll see how that one develops over time. Diablios is moving along nicely, and as I mentioned, we get pre-production cash payments there, about $2.25 million per year. Here's a view of the pit and the infrastructure at the Gediktepe operation. And moving on to Leeville. Leeville's now reached payback. We bought this royalty when we bought Bullion Monarch for around 45 million Canadian dollars. And with the court settlement around the lawsuit of the area of interest royalty here, we have now surpassed payback. We've paid this off completely. Everything is upside. We expect a mine life here for additional decades into the future. And it's currently paying at about approximately 2.5 million USD per annum. They continue to announce substantial discovery in and around the footprint of our royalty. So Fennoscandia has been a focus for us for many years now across a multitude of geologic terrains. And we see a lot of deal flow coming from here with tens of millions of dollars going into drill holes across the portfolio, creating that discovery optionality. I'll point out the Gumsberg ongoing discovery, the Tom Tebow ongoing discovery here, and then very importantly, the Kaukua system, platinum, palladium, gold, copper, nickel, commodities that we love. They recently announced a near doubling of the resource. We believe long-term that's going to be a key asset in our portfolio. And that speaks to the example of us both growing royalties through the royalty generation, but also buying royalties to augment that portfolio. It was our guys on the ground that knew the prospector that had the royalty at Kaukua that facilitated us to be able to buy that for 250,000 Canadian dollars. Balya is going to be a key cash flower for us. I know it's been a long time coming for it to reach commercial production. They are stockpiling ore now. They are planning on building a new mill. This is a 5,000 ton per day mill that they have here. They're talking about building another 5,000 ton per day mill. That's great news to us as royalty holders. I do expect this to start cash flowing this year at around $500,000, ramping up towards $5 million a year within 5 years, roughly $1 million per year increase from the 4% royalty that we have here on the lead, zinc, silver operation. So the most valuable royalty in the portfolio. This is the royalty we have at Cukaru-Peki, also known as the Timok project. And we believe this royalty is 0.5%. Xinjiang says it was 0.225%. We're in amicable discussions. I'm confident that we'll have a resolution announced along with the new royalty agreement that gives us access to data within a month or two. and this will be a key event for us. I believe the overhang on the stock price created by this event is a buying opportunity. So it's a big portfolio. Claude, you know that. We get a lot of questions about how to value EMX. H.C. Wainwright does have a good piece of work put out on us. They were the first investment bank to cover us and to tackle the big effort of trying to value 300 mineral property assets around the world. I think when you tear into it and look at it, you realize that we're trading at a discount. My view is that they're giving away $5 bills for $1.90, and you should take advantage of that. Our royalty generation, that side of our business has worked like a Swiss watch for decades, and it continues to work. You'll see more deal flow emanating from us on that side. We're happy to have these big acquisitions under our belt. We'll take some time to digest those and establish the cash flow from Gediktepe, et cetera, before we move on with any large acquisitions. We've made a lot of money from our strategic investments, reinvested it astutely across the portfolio. I think that the next big win from our strategic investments will be the premium nickel, and we're off to the races.
Time for one question. Anybody? Sure. Yeah.
Yes, sir.
You showed different companies you are invested in, and was this the actually portfolio, or was it a portfolio of all your earlier?
So I showed a couple different slides, and I'm happy to explain that. I showed a slide that showed our counterparties. Those are the ones that are investing monies across our properties globally. Then there certainly is a portfolio of shares that we hold, and we own shares from two sources. One source is from us selling projects, and we get paid in shares, and we've done very well with those over the years. We typically bleed those off into the market over the course of years to be able to turn that into cash. That's worked out very, very well for us. It's an added aspect of optionality of the business model. We also have shares that we've purchased. Those are our strategic investments, premium nickel being the current best example.
All right. Thank you, Dave.
Thank you.